Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. So let's keep up the euro currency analysis. So today, as usual, we prepared the weekly report. It's a lot of information, and actually I do not want even to talk here about the fundamental background because it's really too wide topic right now. Well, it's a lot of things to discuss on the fundamental background. Currently, the view of the investors stands differing. In the long-term perspective, in the shorter term, maybe everybody expects that the dollar should keep going higher, but in the longer term, some different factors mentioned that, makes opinion differ. And some investors think that tendency should be straightforward on the dollar to the upside, while others have some doubts and think that maybe it will not be as straight as suggested right now. So my personal opinion is, despite all these doubts that mentioned currently, I still think that the tendency should be more or less stable and long term. Why I think so? So I have put in the fundamental background, fundamental analysis today. In the shorter term, we still think that downside action is not over yet, and we intend to wait for 115 target. A few reasons for that. In general, if you'll take a look at the different markets, you'll see that market reaction not consistent with the headlines and with the bold numbers that we've got in the payrolls, which supposedly should be more strong reaction from the markets. So, but in reality, you could see that reaction stands somewhere even opposite, but somewhere is anemic, like on the euro currency. And this makes us think that tendency will continue. I mean, to the downside on euro currency. In fact, the reason stands in the details of the report. We also have taken an in-depth view in report now fundamental research. So, in fact, report is not as bad as it seems at the first glance. So, and that actually was the reason why the market has shown anemic reaction on the numbers. I will show you the chart of the interest rates, and you can see that they're totally ignore the bad numbers on the payrolls. Those who are watching our gold analysis were familiar with this chart, and markets coming to the XOP target on Fridays was really strong rally, totally just denying the bad numbers and just keep going higher. On the euro currency, although on the daily chart of the year we do not have something really special, here you could even see some minor reversal bar has been formed. But the major detail that we have stands not on the euro, but on the dollar index. If you'll take a look at the dollar index, you will see that the bullish grabber has been formed here, and it suggests the taking out of this top. It means that market could form here a minor butterfly to take out the previous top. For example, it might be something like that to finalize this projection, showing some wash and rinse around it, testing the levels before major retracement could start. At least we suppose something of that sort. So it means that before something else will happen, it seems that dollar should challenge the previous top. For us, correspondingly, it means that euro should challenge the previous lows, and chances that it will reach the 115 area that we initially suggested now have increased. So that's the major conclusion that were made for short-term performance. On the lower time frame, on the 4-hour time frame chart, I do not see something really special. So here is the same target we see that we suggest it should be reached. But on the hourly chart, we correspondingly has got clear bearish patterns, got this triple to sell. Retracement that we discussed previously has been reshaped a bit, but as you can see, market stuck on the same level. So once the ABCD targets have been completed right at the same confluence, this market has completed or prepared, better to say prepared, Gartley's triple to sell. potentially this pattern could become the background for starting downward action. Well, if you trade on intraday charts, it's not forbidden, of course, to consider taking the short position, so you could control simultaneously price action on the dollar index to keep well at the bearish, the grabber that we have on the dollar index, and keep watching for entry based on this guard is cheaper to sell. But this is for very short-term traders. For us, since we're considering mostly performance on the daily chart and the follow time frame chart, we're just sitting on the hands and waiting when the market will be around 115 area. Then, hopefully we'll get some reaction on the strong support finally, and maybe some patterns will be formed that we could try to use for entry. That's our preliminary trading plan for the coming week. Besides, guys, finally, what we could say that the ABCD shape in general, it's not typical for reversal stage of the market. So it is typical for the retracement. And that's another reason why we think that downside action could continue and should continue by our view. So let's see what will happen next week, and hopefully we'll get some initial setups for a long entry or some hints for a long entry somewhere close to the second part of the week.